All right. So, what other setups going into this holiday? Big move in currency, S&Ps near all-time highs, bonds.
You know, there is
What?
no shortage of things to talk about, that's for sure. Let me
Yeah.
just see if I can get, I'm on a new computer. I forgot my defaults weren't set up. Let me get this going here.
Okay. How have you been?
Good, not bad at all.
All right.
Busy.
Yes.
Yeah, it's a
Some
good problem
yes.
to have.
Yeah, it is. Yeah. Some
Okay,
bull markets and metals
right.
helps and things like that,
Yeah,
right?
actually we're short
Gold.
gold. I have some stories about that. It's been, there's no easy money in these markets, that's for sure. All right. So,
That's all I
um,
make is the tough money, and then I get
right,
out,
of
and
course.
then the windfalls happen without me. But
Exactly.
that's my
All right.
paradigm.
So I'm going to start, if it's okay with you, I'm going to start with the currencies,
Sure.
just to kind of expand on the conversation your other panelists are talking about. So I
Okay.
have a little bit different view, and obviously the only thing that's going to determine who, only time is going to tell how this works out.
Right. It's always that way.
It's very uncertain. But what I'm looking at is there's two things. The dollar index futures contract has reached our upside target. And when I look at seasonality in the currencies turns right about now. This is a euro chart. Um, this is based on futures data over the last 26 years. You can see, hopefully you can see that right there.
Yeah.
And normally the euro bottoms out in late November. Here we are in late November. For me, the chart setup looks pretty promising. There's no guarantees. Maybe we
Yeah.
just roll right back down and keep going lower. It's hard to say, obviously,
Yeah.
until we don't know. But seasonal low in the euro and the top in the dollar is basically generally occurring right now. Let me show you my
Okay.
dollar chart. So this is the chart we've been working on in the dollar. It's a monthly chart. It looks very boring because we were just trading in this range. I think the top of
Right.
this range is going to hold. 108 is what I mean. We've kind of that's kind of been our idea all along. Now, if we're wrong and it breaks through, nothing's stopping it until we get up into the high 118, 119 area. So that would be really interesting if that happened.
That's a
Yeah,
crisis. That's a
that's a
crisis move.
crisis. That's a
Okay.
problem. I do
Okay.
not think that's going to happen. I think, honestly, I think that I mean, we'll see. I think the dollar probably topped out on Friday. That's my best guess, but we'll have to just kind of see how it goes.
Okay. You
Um,
have some nice downside targets if we break 100.
I do, yeah. So I mean, we've been in this range for a couple of years. So, and if
Yeah.
the last time that Trump actually have a box here, a lot of people are talking about the Trump trade,
Yeah.
which is the assumption is it's bullish the dollar, it's bearish for treasuries. But the reality is, like, that's really not what happened last time he was in office. I know there was a lot of things going on, COVID, but here's where the dollar was when Trump came into office, and it
Yeah.
mostly was sideways to lower. This is where it was when he left, but COVID did throw a wrench in that. Um,
Okay. So
you
sold
know,
off as he entered
it
office,
did.
and it's in the same position
Yeah.
now.
Yes. So we're coming in on a high note, exactly like it was last time around. So my best guess is this is probably the highs, and we probably maybe see a repeat of what we saw the last time he was in office. Now, again, don't know till we
Okay.
know. I think I have something similar here in bonds. You can see the same thing. The assumption is Trump must be, inflationary because
Inflationary.
of
Yeah.
tariffs, but the last time around, he really wasn't. He came into office right around here. This is about 3% in the 30-year.
Yeah.
It Rates went down a little bit. Now, if it wasn't for COVID, this is the big COVID spike here. We
Yeah.
probably would have literally gone out right around where he came in. So he wasn't really. He didn't. I mean, not as much. It's hard for me
Yeah.
personally to justify 4.6, 4.5% when last time he was in office we were way up here. I know there's all kinds of different things. It's not apples and oranges, but I'm just saying. I'm not sure the
Yeah.
narrative is right. I think it's wrong, is my guess. So I think all these Trump trades are going to end up being unwound.
Okay. Well,
Um,
then that means that it was a buying climax in the market. And
yes, I agree. Yes,
but
I do.
we're at I mean, Nasdaq and S&Ps are kind of like, I mean, really Nasdaq is lagging a
Mm.
lot. What do you think? I mean, that's part of the Trump trade. I've talked to people who say that was a buying climax that we had. What are you thinking?
Right. I think we're getting really close. I'm sorry, for some reason it's not allowing me to pull up my other windows. Let me see if I can. There we go. Sorry about that. Okay.
That's okay.
All right. So I've got a few actual commodities that maybe you don't talk about
Oh,
too often that we can take a real quick look at. But I do agree. Let me start with. I apologize. Let's go back to the S&P while you're talking about it. So seasonality in the S&P is bullish,
yeah,
mostly through the holidays. Almost every year, even during the financial crisis, it mostly went up during the holidays. That's just how the markets are. So
yeah.
while I think the market kind of priced in the Trump victory in advance, this is the S&P monthly chart.
Okay,
I think the odds are we probably extend that and kind of melt up. I'm looking for about 6170, 6200, somewhere in there. But this
okay,
feels to me so much like 2021, where we did just this. We melted up during the holidays. This is a November bar, this is December. And
yeah,
then come January, we rolled over and it was a pretty tough correction. I personally think we're going to get a repeat of that. So that's what I'm
okay.
looking for. A little
All right,
higher, and
cool.
then I think we're at risk.
Nice look.
Uh,
Okay,
okay,
you could go to cotton now.
okay.
Was it cotton?
Yeah, that one was cotton. Yep. So,
I like
no,
that.
yeah, so cotton's a market not everybody follows. The thing is, cotton's only been below, right? This is July cotton, by the way.
Okay,
It's trading at about 70 cents. The front months are trading uh, in the high 60s. And the reason that's important is cotton's only been below 65, 66 three times in the last like 3 decades. And it was during COVID, which everything, got
yeah,
shellacked, during the financial crisis. And also there was a commodity bear market in 2016. So it's only been below these levels three times, and those were historically troubling times. We'll just put it that way. So it's very likely that the cotton prices, any dip down into the high 60s or 70 areas of buy. So what we've done with our clients is we've put on risk reversals where we
okay,
sell puts, buy calls, just to get
yeah,
in the game. Um, Again, I just said cotton hardly ever goes below 66. So there we go. We're selling a put there. We think that's a pretty safe bet, unless unless we get World War III or something really crazy happens. But statistics are pretty good for cotton to go up from here. Another thing that people may not be looking at that we've got going on.
corn. Oh,
Oops, that was the wrong one. My bad. Hold
that
on.
was Ethereum, right? Oh, oh,
Actually, that was
coffee.
another. That was,
Oh,
yeah. Coffee is really starting to move.
wow.
Um, yeah. So the all-time high in coffee is about 330. We're right around 305 right now. I do think I do think we probably go a little bit higher, which is why we've constructed call ladders. I don't know if your followers are going to have ever done a call ladder. It's a strategy where
A ladder,
a
ladder,
ladder,
right?
yes.
Yeah,
So
okay.
we're basically trying to use the market's money to buy a call option, but it's not without risk. This particular trade we put on, we collected um, a penny and a half, which is like $500 to $700, depending on, everyone gets it at slightly different times. But what we're trying to do here is we want to be long, but buying this option outright would cost you like 5, 6 grand. So instead of paying several $1,000s for an option that's has all this volatility built into it, and it's going to erode quickly if the market reverses, we sold 2 calls above, which is a little scary because our risk is higher. So
Unlimited,
like if
yeah,
yeah, if we're too right and the market just keeps running, kind of like what Coco did last year, that's where we get into trouble. But a position like this is pretty awesome because the only way we can lose money, because we were able to execute it as a credit. Basically, we sold more premium for these 2 calls than we used to buy this call.
right,
The only way we can lose is if the market is above 350 at expiration, because how it works is we're making money from 290 to 310,
right,
above 330, which is where our short option risk
right.
is. We give this money back all the way up to 350 is where we run out of money. So coffee's never been that high. So the
Yeah.
odds are pretty good. And if
It
we're
looks
real
like
lucky,
Bitcoin, Carly.
It does. It's a lot, to be honest. It caused me a little stress over the weekend because I started thinking about what cocoa did last year. And even though the odds are in our side, it's still, there's no free lunches for sure. But if at expiration we're somewhere between these two levels, which would take a lot of luck and timing, and I mean, I'm not saying
right.
there's some luck to some of this stuff. It
Sure,
would
I'm
pay.
not
It would.
against luck.
It would. Me neither. I'll take it. It would pay off as much as $8,000 because 7,500 for this call spread
Yeah,
plus what we collected. So it's a very high reward, potentially high reward, very high probability type of strategy. You don't want to do this kind of thing in a normal market. You want to do it when prices are exploding. Let me show you what coffee looks like on a monthly chart. So
wow.
daily chart looks pretty tame. It's not tame at all. This is a really wild move. And I think we probably run up here and test these general areas, basically new highs, run the stops, that sort of thing. So that's going to be
Yeah,
interesting.
yeah, nice.
Let
You
me see if
doing
I can find.
anything in grains? Oh yeah, there you go.
Yep.
March
Yeah.
10th.
So yeah, um, I'm short-term bearish the grains.
Okay.
I feel like the seasonality is really off the mark in grains. Just there's been a lot of weird stuff, like the crazy bull markets caused a lot of farmers to hold on to grain a lot longer than they should have. Like instead of selling at harvest, like what
Yeah,
would normally happen,
they're
they were
stuck.
hanging on to it. Yeah, they don't want to sell it. A lot of farmers look at 4 to 450 corn is too low. They feel like because their input costs were high, they just they feel like they're owed more, and
So
market.
they're
So
gonna
they're
get
holding.
squeezed and puke,
Yeah,
right?
I
Okay.
think that's what's going to happen. I hope not. Farmers are generally very good, nice, honest people, but the reality
Yeah.
is you can't tell the market what you want. The market tells you what you get. So unfortunately, there's a lot of them hanging on, and I think we're probably going to kind of melt down. I wouldn't do anything unlimited risk just because of the weird environment of seasonals. But you can see this is a trend line. It held the trend line.
Yeah.
So our clients are just long puts with some time
Okay.
on it. Also, going
How
into the
far out?
holidays, yeah,
How far
these
out?
these
March?
are these are March. So
Okay.
I think about 90 days at this point.
Yeah.
Um, Something to keep in mind in the holidays is you don't want to have too much risk exposure just because I've seen some really just stupid things happen over Thanksgiving and Christmas for no reason, really, to be honest.
Yeah,
Fundamentals
yeah, it's a
just
good
don't matter
reminder for
sometimes.
people. That's a
Yeah,
very good reminder.
I've learned that lesson too many times
Yeah.
that I want to talk about.
How many times do you
Um,
have to get hit in the head with a hammer to get it?
exactly. Well,
Right.
I'll never forget. I can't remember. I think it might have been 2014. I could be wrong. It might be somewhere in that ballpark. We had some downside crude oil exposure, and there was an OPEC meeting that landed exactly on Thanksgiving, and the CME opened oil for a couple hours just because of the OPEC meeting or something. It was
Yeah.
the details are kind of fuzzy, but what happened is oil gapped down like $9. So
Yeah. Yeah.
uh,
Merry Christmas.
yeah, it was awful.
Yeah.
So we're also playing the downside in hogs again, another market that a lot of people probably aren't following. Um,
Right.
Hog prices are relatively high. We're going into a seasonality period that's bearish. Let me see if I can find something that might be a little more relatable here. This is a 10-year note bond chart. This is what we're looking at. I kind of showed you with the 30 years, so I'm not going to spend a lot of time on this, but
Yeah.
I believe we're in the bottoming process in bonds. We saw very similar. I mean, this is a lot messier and choppier, but there's a lot more government interference going on here. There's a lot of
Yeah.
things happening here that weren't happening in the financial crisis. But if I had to take a bet, basically it's as simple as actually, let me show you. I have a chart that might be a little better. Let's look at this one. It's really, in my eyes, it's really this simple in the long run. In the short run, things get chaotic and narratives take over and things happen. But this is the really big picture of stocks and bonds.
Yeah.
The red line are 10-year note futures. Obviously, the green line is the S&P.
Yeah.
And you can see that we always kind of come back to this type of center line. Everything
Reversion.
yes, reversion to the mean. We're just out of balance. Bonds are probably, in my eyes, bonds are too cheap. Stocks are too expensive. It's not something that happens tomorrow. Like sometimes it takes several months. We've been looking at this chart for for months. So you can see it hasn't, nothing's really happened yet. But if we're talking 5 years, maybe even, there's a really good chance we see these lines come together. Yeah, they always do.
Nice look.
Yeah.
Very interesting look. Okay. I mean,
Okay.
oh, okay. Go ahead. You have some gold
I'll
stories to.
I'll just real quick.
All right.
So we started getting bearish gold right around here, around 2650, 2700. And the
Yeah.
reason we did that, I'm going to just show a chart real quick here, is we've been working off of this monthly chart. And you can see there's a really obvious trend line here. The market poked above it, which caused us a little bit of stress because we had that trade on that I was just showing. Let me pull it back up. So we were a little early to try to play the downside in gold, and this stressed us out a little bit here on this big spike. So in the reality, we had a pretty good position on. We used the market's money. We sold the call, we sold the put, we bought a put. We were in a really good spot to make money on this downturn, and I screwed it up because I got a little nervous when we started pushing 2,800, and there was just no sellers. It was a seller strike,
Yeah.
and it got a little bit scary. So once we saw this big initial break in gold, we sold a put. We sold the 2,600 put. Let me just rephrase that. So we actually bought this put back, took a profit, resold the 2,600 put, which was right here. And we were basically holding a limited risk credit spread on the downside and short a call. And everything was doing fine, but then we sold some micro futures against it right here, which turned out to be a really big mistake. So
Yeah.
it's just
Yeah.
a good reminder.
Yeah.
Sometimes you
You
can be
may
right
get
and
whipped
still lose
around.
money. Yeah,
Yeah. Right the
it's a
market, wrong the trade.
yeah, and the thing is,
Everyone's
if
experienced it.
oh, for sure, in hindsight's always 2020. But when the thing is, if you don't hedge and it keeps going, you're toast. You can easily blow out an account. So darned if you do, darned if you don't with this type of volatility. These are really big moves. I mean, from 28, we're talking like $25,000 moves here. So
Yeah. What are you thinking from here? Back to 25?
I do. I honestly, I think let me go back to my other chart.
So a weak dollar and weak metals, people probably have a hard time,
Yeah.
you
Yeah.
know,
It's definitely different. It's for sure different. But the
yeah,
dollar and gold are correlated right now. It
yeah,
doesn't make a lot of sense for, historically, but that's really what's going on. I actually think we're probably eventually going to see 2150. Seasonality in gold is bearish for the next month or so, and then it kind of stabilizes. But I don't think seasonals are going to stop the down move once it happens. I think we're repeating. This is 2011. You can see
yeah,
pretty similar, kind of last hurrah rally to what we're seeing, and I think eventually it plays out and we start just melting down. So
right. Okay.
that's my opinion.
All right, that'd be nice. Probably back up the truck move if we get down there.
Yeah, oh, for sure. If we get down like somewhere around 2150, which is basically that
Yeah,
sounds
breakout. It's a
right.
breakout.
Exactly. It sounds impossible when I throw that number out there. People think I'm totally insane, but we were literally just there like in April. So
Yeah,
it's not that insane. We can easily
yeah.
go back and retest that. And gold is, I mean, look at this gold chart. You can see gold is really known for ramming it to the longs every once in a while. And I think that's probably what we happen.
Oh, that in silver, I heard that some guy called Slammy Whammy.
I haven't
Have you
heard
heard
that.
of him?
I won't,
Oh no,
no.
Slamming Sammy
Oh
comes in
gosh.
and it's probably JP Morgan. Anyway,
Yeah,
anyway, uh, I really some great looks again, Carly.
sure. Thank
Really
you.
appreciate you coming here, and
No
hope
problem.
you and your family have a great Thanksgiving. And thanks
Thank
for
you.
your giving of
Well,
coming here for every 3, 4 months to share your hard work with us.
of course. Thanks for having me.
All right, Carley Gardner, and the best way for people to follow your work. And Carley's an options broker. She does options on futures, which are, you could tell she knows different strategies that you could learn, credit spreads, etc. There you go.
Yep. Well, thank you. Yeah, if you want to look if you want more information or if you want to sign up for a free trial of our newsletters, you can see on our website, there's a button right here. You can sign up and you'll receive a lot of the analysis that I'm talking about, at least for the next couple of months. You can follow along, see if you're interested. It's decarleytrading.com, DECARLEY trading.com.
And Carley's written some books. Let's see those books that you've
I have written some books. If I scroll down here, sorry, there you go. I've written more than this, but don't worry about anything else. These are the newest and latest and most updated. So if you're interested in learning, some of the option spreads that we talked about today obviously are covered in detail in trading commodity options with creativity. And if you're looking for just market analysis, seasonality, chart stuff, higher probability commodity trading is probably a better bet.
My trading warrior sister, Carley Garner.
Thanks, Dale.
All right, thank you, Carley, and really appreciate some great looks and a dose of sanity for people looking for insane moves, right?
Yeah, exactly. Yeah.
All right,
Thank you.
so you're very welcome. So that's a wrap, everyone. People thanking you. They enjoyed it, Carley. And you guys know where to find her, and you can find her on X under her name. Okay. And great views from Dan. Everyone enjoyed it. You could join the team in about 17 minutes on the Morning Edge. It is a shorter week, and think about that word Thanksgiving. Okay. It's gratefulness and it's also giving. And we're going to give you a couple more days this week and probably Friday. Ashish, nice to meet you. All right. Adios, everyone. Don't just count your pips, count your blessings. See you for Turnaround Tuesday. You're very welcome.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.